Hi, and welcome to another daily recap. So today I'm going to recap my day 46, which is June 28, 2024. Yeah, I didn't recap for many days. Yeah, sometimes you can also say it as many weeks because I don't want to because I want bit shattered and I want to find my right path and I want to streamline my trading. So I'm not yet streamlined, but I want to streamline it anyhow. So I can't stop my daily recaps, right? When I stop my daily recaps, it I suffer much more because I can't read the notion and create and analyze the previous week's result. I just started again. So in the pre-session analysis, this is a daily chart, and the daily is actually bearish, and the internal is also bearish. So I'm expecting the price to take out this daily swing low, which is weak. If I zoom into the daily internal, you can see that the price has taken out the previously high. So I was expecting the price to take out the previous day low liquidity. And yeah, there is this low resistance liquidity, and this is the previous week's high, but still this is Friday. So I expected the price to take out this previous day low, obviously. And there is also this yeah, previous week's low was taken. So only the previous day's lows were there. And the price was about to move down and take out this week low. So I was expecting the price to come down to take out this previous day low liquidity. So obviously my daily bias would be bearish. So this is the 4-hour chart, which is zoomed in version of the daily. And you can see the pullbacks in the pullbacks clearly. And now the price has pulled back to the daily supply. And this is the previous week's high. And but this is also the 4-hour internal strong. So there is a conflicting bias, but I'll go with the market structure first because that forms the base of my analysis. So I'll neglect this previous week's high. I'll take the 4-hour strong. And currently the price, this is the last available supply for the 4-hour because it has inducement and it has swept some liquidity. So I was expecting the price to react of this supply. Actually, the price has already started to react, and the price made a small fractal pullback, and it's now rallying down. So it's very obvious that today maybe the price can go slightly up and then push down and take out the weak internal low. This is a zoomed in version where I have marked some extra annotations for you. The swing is bearish, internal is also bearish. So price is coming off from the daily supply and struck the buy side liquidity. Buy side liquidity. Thus, I'm expecting the price to continue its bearish trend and take out the weak internal low. Yeah, okay. We can also see here that the price has swept this. Wait, yeah, price has swept this uh, buy side liquidity, and we can also see this is an S&P divergence when compared to DXY. In DXY, prices never took this liquidity, but in Euro USD, price took this liquidity and it started to rally down. High probability when the price makes S&P divergence in higher time frame. Take out the sell side. Okay, yeah, once the buy and also this is a range. Okay, this is a range. So when the price takes a buy side liquidity, obviously the next target will be a sell side liquidity. So price took the buy side liquidity, which is also confirmed by S&P divergence with the DXY. So the only sell side liquidity available is below this low, which is also a weak low. So obviously this is also an equal low. So I expected the price to come down to take out this weak low. Obviously, very clear price action. So zooming into the 1-hour chart, you can see this is the 4-hour DXY, a bearish DXY, and once the price, so this is a textbook concept. Price took the liquidity, made a bearish stock, find the POI, take the trade. Very simple. But the thing here is there was another POI right here, which also took the liquidity and has this POI as inducement. So this could be the high probability one. But since the weak low is very, it is in between uh, this range. So price already took the buy side liquidity. Now it needs to take the sell side liquidity. So price maybe if I expect the price to come all the way up here, I may be missing this trade because price may be in a hurry to take to make a slight pullback, fill in some pending orders and then rally down. So it may be in a hurry. So this is M15 and you can see this is also a range. You can clearly see the same bearish divergence and within this you can see uh, the bearish divergence in H1. This is also bearish divergence, and this also took the liquidity and rally down. The only disadvantage is that this does not have a lid. So the only available liquidity will be above this POI. But with the pullback inducement, I can take a short. So that's what I expected the price to be. And yeah, same thing here in the M15. If I zoom in, you can clearly see price has took all the sell side liquidity, and push down. But there is no leg inducement. When this pullback took out this low, this would be liquidity. But this did not take out this low. So this is not a liquidity point. But at the same time, I was not willing to lose this, miss this trade out because it's very clear POI, very clear price action, very clear high time frame bias. So swing is bearish, internal is bearish, swing is bearish, internal is also bearish, shorts are facing high probability one. The high time frame bias is bearish, and today's trade is going to be shorts. I'm willing to take risk entries if I don't get enough confluences in the lower time frame. Risk entries in this POI. Ideally, would love to see the M15 LC2A play out, but if not, then look for LC2A and M5 if the price goes deep inside the P1. It's simply the liquidity purge that I'm talking about. I'll be looking for liquidity purge using M15 within this H1 POI. If it doesn't happen, if the price goes deep into the H1 POI, then I'll be switching to M5. Then I'll be looking for M5 liquidity purge within this M15 POI right at the top. This is a caution to myself. So I must bear in mind that though the supply mark seems higher probability, does not have a liquidity inducement. If the pullback inducement is not formed, then the only liquidity rate will be above the POI. It's very obvious. So in that case, I had two other options. One is I can look for shorts once the price took the liquidity above. Otherwise, I can wait for the price to, come and tap into the H1 POI above. So I had two other options. So this is once again, I'm adding confluent, this is game plans. So this is game plan one, price tapping into this POI, looking for the M15 liquidity purge and then come down. This is game plan one, this is game plan two, price taking out the buy sell liquidity above, and then I could look for a liquidity purge set model, and then I could take an entry. And this is third way where if the price goes all the way up here, I can look for risk entries or I can look for liquidity purge and then I can look for shorts. But during session, yeah, the price came, made a liquidity purge in M15 during the session, during the London session itself. So this was fake break. When you can see this one candle is inside one candle. So pullback, inducement, and then fake break. You can see this is in a lower time frame. Price first move down, chalk up. So this is liquidity purge actually. So when the liquidity is purged and the price tapped into the POI, stop. I place my entry right here. Price gave a good reaction of this, came to, at least I think it's 0.7 hour. Yeah, I think it's 1 hour, and then price pushed up heavily and took my stop loss. So yeah, it's a high quality trade. Definitely, it's a high probability trade. If not this, I was happy to take the second loss if the price comes to this POI, so that I can, and also the entry model also played out. And yeah, price with this, you can see two Morboso candles, and if you see in H1, this was a single Morboso candle. So I was not interested in taking any trades within this M15 POI. So I just wanted to wait for the M15 to shift bearish for the price to come into this H1 POI. Once price took this sell side liquidity and started to come down. I could have, but there was no liquidity entry model here. So I just waited for the second leg to form and then I could have taken the trade, but there was a bullish divergence, bullish S&P divergence used with this demand. You can see the price actually took this liquidity, but in DXY, the price respected its order block, didn't take any liquidity, and then it went up. So at that point itself, I decided that once the price took sell side liquidity, the next obvious target will be the buy side liquidity. There is no leg inducement here, so the only buy side liquidity available would be above this. So I can't risk, so I didn't take this trade. I rejected this one. You can see price took the sell side liquidity with KSMP divergence. Now I'm expecting the price to take out the buy side liquidity, which is above the POI. This makes the POI low probability to trade with. So I didn't take this trade. I was sitting in the sidelines. Price gave a reaction and it took up and it boom. Price gave a slight reaction and then boom, the news came out, 13:30 I think UK time, and price tapped 26 POI. Then there was no entry models because of this big candle. There is no entry models. That's it. Session over up to this. Price was bit consolidating, and I was out of the session when session got ended, and I ended my session with a single loss. It's a high probability condition, but price need not always listen to what I analyze. And yeah, today, you can see the price actually took out the internal high. There was a news here, so that's why this big gap. Price actually took out this one, and I'm not trading London, New York today because there were so many debt holder news today. I think two, I think one at 13:30 and one more at 3 o'clock UK time. So I'm not trading the New York session. That's why I had free time. So I just posted this daily recap.